Most of the big brokers, they will start somehow play with your account without even you noticing it.
Mark Henry, a trader who worked for brokerages in Dubai.
And what happens with the big brokers that do not send trades anywhere?
So the big brokers will take the risk, like all the risk or some of it. So for example, I have 100 clients, I can just send 70% of that to the market and I keep 30%. I take the risk for that. So when the clients make money, I pay from my own pocket. And if the client is losing, they take all the money.
How much brokers pay approximately for decent regulation?
For the offshore, it's not expensive.
And that's usually where the scam brokers are being raised.
Yeah, if you're talking about big regulations, it can be like millions.
Oh, really?
Yeah, $10 million just to get the license.
So Mark, what it is to work for a Forex broker in Dubai? Because it sounds like a dream come true. Before, when I was studying in London, it was a dream come true to be in London, to work as a trader for a broker in London. But now nobody talks about London, everything is Dubai. How it feels?
It's actually rewarding. It can be like really rewarding because, as you said, like everyone was in London before, like every broker would start in London. But right now, most of the brokers, they tend to go to Dubai because it's kind of the hub. Every broker wants to open an office in Dubai, even if they are not using it much, but they want to get regulated there. They want to like have presence because it's in the middle of the world and many of millionaires all over the world are moving there. So it's kind of competitive as well for brokers to like hire good people who are doing like sales in brokerage. So that's why like they offer like competitive salaries, benefits, so everyone can work with them.
And also all the events are there. I met you on the Expo in Abu Dhabi earlier this year, and now I don't see a lot of events going on in London. Everything happens in Dubai. So is it just kind of a prestige for the brokers to have an office in Dubai, or they also want to get the local clients, which are obviously rich people?
It's kind of a mix between the two things. So if you have a presence, this is going to be easier to meet clients in Dubai because again, like we mentioned, that it's in the middle of the world. Many flights go there. Sometimes people fly to somewhere, but they connect in Dubai. So it's easy to travel to Dubai, especially when you are focused on the rich clients. So if they are coming from London or from Asia, so Dubai is like in the middle of everywhere. So this is part. And the other part is like, it's good to have an office where you meet clients physically there. Dubai is a fancy place, luxury, so you can take them out to nice places also.
Is that what you're doing for the broker you're working here? Today you're not representing a broker, just to make that clear for our listeners and viewers.
Yeah.
You have experience with many brokers. You're currently working for a broker and you're one of our most active VIP users in the algo trading space. So I really wanted to invite you to share more what is behind the brokers, what people should be careful of. But what do you do? Can you share like what is your daily job, full-time job for the broker located in Dubai? No need to mention the name.
So my job is basically around finding new clients somewhere or another. So we look for clients whether online in another country or we meet them in Dubai because they have like businesses or they want to start trading, but they don't know how to do it. So my job is like to guide them what investment or what trading works for them, because different clients have different prospect about trading, or some of them they use EAs like you do at the algo space, but some of them they are manual traders as well, and some of them are super savvy. They ask about like many details, but some they tend to have like investment portfolios, so it's different. They trade stocks, they trade with bonds, they just like want to beat the inflation kind of thing. So we guide them through this journey because some of them, they don't know anything about the financial market. They majority of the people, when they want to invest in Dubai, they invest in the real estate, for example, but they don't know anything about the financial market or how it can be rewarding comparing to real estate, for example.
Yeah, we all seen that the real estates in Dubai are probably the number one investment in the world nowadays, or one of the top investments in the world. But let's talk about brokers today and more about how people should really pick a broker. What would be your suggestion for a complete beginner to how one should select the broker and how one should recognize the scam broker? As we know, there are a lot of scam brokers. I assume in Dubai, it's a lot of in Bulgaria, it's a lot in London, it's everywhere. So how people should select the Forex broker they want to trade with?
So I would say regulations is the most important. When you find a broker who have like many regulations, especially in different regions, that's a good broker. Not necessarily that, but again, you can be like based in one country, but you have the highest regulation in this country. Like if you are in London, there is FCA, which is a heavy regulation. They monitor the broker very well regularly. So it can be like a good thing. And also some brokers, they get regulations in different countries where client can be mapped under this regulation based on the country they are. So they can have FCA, but they have ISCA in Dubai, for example, and ISCA have many categories. So the category 1 is the highest, the hardest to get, and they pay a lot of money to get that. But then comes like, for example, category 5, which is just introducing clients to another broker, I would say. So it's not like very good. You can check all of these details on the regulation website. Like you can go to ISCA website and it will show all the brokers. You can go to FCA website and it will show all the brokers.
That's something I've said to many of our traders and students, that they shouldn't only trust what is written on the broker's website, but they have to check on the regulator's website. Is that broker really regulated? Because everybody can lie. Everybody can say it's FCA regulated broker.
Yeah.
We've seen plenty of times when it's not. And I really want to know approximately how much brokers pay for regulators. But before that, because you've mentioned regions and countries, how important is, let's say I'm in Europe and I'm looking usually for the SISEC regulation. Now, after the Brexit, FCA is only for UK, not anymore for Europe, right? But let's say I'm using a huge broker in Australia, like Black Bull, for example. Am I under the regulation, or it's like I'm using unregulated broker because they have the New Zealand regulation, the Australian ASIC, I think it was called.
Australian ASIC.
ASIC, yeah. And I'm in Europe. Is that means that I'm under a regulated broker, or I should depend on the trust and the reputation of the broker? Does that mean I'm not using a regulated broker if they're not regulated in my region?
This is not true. They can be regulated only in their region, but they accept clients from all over the world.
All right. So if they accept me as a client,
yes,
I'm under the regulation there.
But you need to make sure that you are under this regulation, because one company can have many entities. Each entity is under a different regulation.
That's a good point. Yeah.
I'm not so sure about Black Bull. When you register with them from here, from Europe, they will put you under the ASIC regulation, for example, because ASIC is a regulation, but it can be also a license.
Okay.
So you need to make sure that you are under the regulation. You talk to support or you check the website, the domain can be different.
Yeah, we've seen many brokers having different entities, especially in Europe. There are brokers with EU entity or EU website, and there's a global website which is totally different. Same company, but different entity, different regulation.
Yeah, they will have a regulation, an offshore regulation most of the time, because they will give you like a higher leverage there, for example. So most probably it's going to be like Seychelles or Mauritius or PFI, British Virgin Islands, or St. Vincent. These are the most common.
And that's usually where the scam brokers are being raised.
If your broker is having only one of these, I wouldn't recommend it much because as I said,
Let's get to the point. How much brokers pay approximately for decent regulation? And second, is that mean that only brokers that have money can actually get a good regulation because it's expensive? I've heard it's expensive, but I don't know numbers.
So like for the offshore, the ones that we talked about, it's not expensive. It can be like couple of thousands of dollars. We're talking about like $20,000-$30,000, and you get the regulation from the offshore. But if you're talking about big regulations like ASIC, FCA or ESCA, it can be like millions.
Oh, really?
I'm talking about a couple of millions. So it can be like $10 million just to get the license.
Which is not a bad thing.
It's not because
because the huge brands can afford that, and it means that just this expensive threshold eliminates a lot of the small scams, right?
That's true. And when you think about it, if a company pays that much money to just have a regulation to put you under, that means that maybe your funds, how big it is still safe. Because let's say tomorrow that this company doesn't want to exist in the market anymore. Still, the regulator themselves, they make sure that they pay you your money because this company or this broker doesn't exist anymore, but they still have the deposit money which they get from the broker to get this license.
Okay, that's a great topic, by the way. What happens when people deposit money with a not regulated broker? Let's say one has a registration on the Seychelles or some of the offshore zones. And what happens when you actually deposit money with a regulated broker? Where your funds go? Where my funds go when I deposit money with a broker? With a regulated and a not regulated broker?
So I would say like in both cases, it's in the same place, which the broker take care of it. So sometimes it's segregated bank accounts. With the big regulations, they ask you to do that, as in put the money under the company, but it's in segregated bank accounts, means that your funds is not like the operational bank accounts that the broker uses for salaries or rents or operations.
Yeah,
So
and the regulators usually monitor those segregated accounts.
Yes, it's I would say it's random, like they go every few months or regularly to check on the accounts. Clients' funds are sent there. And
Are they able to check all of the accounts?
they cannot. It's impossible, kinda, because imagine if I'm a big broker, I can get like hundreds of accounts every day, sometimes thousands. So as a regulator, I cannot monitor each and every account, but I can pick random ones, and if I see something is wrong, this is when they really check every account. They can even like take out the license, which we saw before with some brokers. Well, of course, I will not mention the names, but it happened many times.
And what's the practice for the brokers once they lose their license? Is it true that they just open another brand with a different name, rebrand themselves?
Sometimes they seek a different license in a different region. Sometimes they do rebrand, they call it rebrand, but they really change like the name and they start seeking different clients. Sometimes they just shut down, as you said, they scam people and they run away. But again, like if it's a big regulator, they make sure that they have enough money to pay these clients, even if the broker decided to run with the client's accounts or money.
Okay, so it's number one thing is regulation.
Yes.
What's number two?
I would say trading conditions, because this is really important. This is what we traders need to find in a good broker, because it will make a big difference in our profit. So good trading conditions is really needed.
Yeah, we've been doing a lot of tests in the algo trading space, comparing different brokers, even only regulated brokers. Still, sometimes we see quite a huge difference in the quotes, the bid and ask price, and especially when trading with super active expert advisors scalping EA, the difference could be huge. If you're trading, let's say manually, you open 1 or 2 trades per day or per week, probably it's not a big difference, but the difference when you're active is huge. And in this matter, what is the cost we really pay to the broker? And I guess this is how the conditions are predefined.
If I have to explain this, I need to explain how brokers get charged first. So for example, when they send your trades to the bigger liquidity providers or the market or the banks, they get charged on the notional value. So for example, one lot of Euro USD, which is 100,000 lots buying euros, can cost like 110,000 of USD. So they get charged every 1 million of this value. For you, you get charged, let's say in the ECN account, $7 per lot, but the broker gets charged on a million value, notional value, let's say $20 per lot. So the difference here is this is their real profit aside from the spread itself. So if we're talking about you are getting an STP account, so it can be like 1.4, 1.2 in the spread. So they don't charge you commission. They get charged commission, but they charge you only the spread, which can be like a little bit extra because when you open the trade, the difference in spread is not there with the broker, but this is their profit, real profit.
So as far as I understand, when they transfer this 1 million you're talking of trades into the liquidity provider, they get charged. And obviously to cover this cost, they need to charge the clients a little bit more. And they do it either by the commission or either by the spread.
Yes, correct.
And can you explain for the beginners what is the ECN broker exactly, or the so-called A-book brokers? And then maybe we can cover a little bit about B-book, which is always a hot topic.
So the ECN broker is going to send all the trades that they get. Like for example, I have 100 clients. Whenever the client is placing a trade with me as a broker, I charge you a specific commission, but then I send your trade straight to the market. Straight to the market can be through a bigger liquidity provider or to banks.
Which makes it no risk for you.
No risk.
As a broker.
Yes. So again, like if they charge you like some commission, so they are taking their profit from here, from the commission they charge you, but they send your trades, all the client trades to the market straight, and they don't take any risk.
And these are the reliable brokers, right? Because we make sure that our trades as traders actually go to the real market.
Yes.
And what happens with the big brokers that do not send trades anywhere?
So the B brokers will take the risk, like all the risk or some of it. So for example, I have 100 clients, I can just send 70% of that to the market and I keep 30%. I take the risk for that. So when the clients make money, I pay from my own pocket. And if the client is losing, they take all the money.
Pretty much they take the deposit.
Yeah, exactly.
Money go nowhere, they don't go to the market, they stay with the broker.
No,
this is what we also call market makers.
Yes.
Right, they create their own market.
Because they give you the real market price, the real market conditions, which is real, but at the same time, your trades doesn't go to the market.
At all.
Yeah, exactly.
No real trading, it's like a demo.
Yes.
Usually people are afraid of using B brokers, or once they spot it's a B broker or a market maker, because you immediately think of, okay, this broker does not want me to win, because if I lose my money, they will go, everything, the deposit goes with the broker, right?
Exactly, and that's why most of the big brokers, they will start somehow play with your account without even you noticing it. So there will be like some P codes, some slippage, difference in prices, or maybe sometimes delay in executions. If you are a scalper, you can see this very well. I mean, like you place the trade manually, of course, and you are watching it. But when you see it gets filled, it's kind of after a few milliseconds, but you will still notice that. I'm not saying that the B brokers don't have like fast feeds or fast prices, but if you look at the price feeds from different brokers, you will notice that the price can move a little bit faster with some brokers. That also doesn't mean that they are A booking or B booking. It doesn't mean anything. It's just where they are getting the prices from. But when you place the trade, you can see like how fast it is executed in your platform. But also you need to make sure that your internet is good. You are in a very good location, like server-wise, for example, if you put your account on a near server to the broker. So this will make it less. But if you met all these conditions and still your execution is slow, that means that someone is playing with your trades.
On one of the EAs we are using, I think it was with a Forex Gold investor, there is a spy option thing where you can control the slippage, and it pretty much gives you a notification if the slippage is a little bit higher or if the delay in the execution is high. Is that the way we can actually spot clearly the big book brokers?
Yeah, actually, this is one of the ways, because I have seen this mode that you're talking about is called like a broker spy mode.
Oh, yeah, broker spy mode. Yeah.
And this you can see like if there is slippage, for example, or this is like a delay in execution, which you can also control. It will give you a notification, and you can see that clearly that you asked for a price at a specific price, but then like when it got executed after a specific delay, like maybe some seconds delay, which is too much when it comes to like EA trading, especially because I want my trade to be executed the same time I'm asking for. Yeah, this can be one of the best ways to see like the manipulation in the account trades and executions.
Okay, so on the one side we have the regulated brokers, the ECN broker that transfer all the trades on the real markets to the liquidity providers. On the other side are the B-book brokers that create their own marketplace. They're happy when the clients lose their money. They find ways to manipulate the trades, put a little bit slippage, put a little bit delay. What's in the middle? Are there brokers that do both, like A book and B book within the same broker?
Yeah.
And if that's the case, then how do they decide to which clients go in the A book and which clients go to the B book?
So as I told you, like me as a broker, I can decide whether to send, like, for example, some of the trades to the market and some of them I take the risk for it. But of course, I need like someone who is very good in risk management to do that for me, right? This is when I decide, oh, this client is losing a lot of money. Why would I send all this money to the market? Because he's going to lose it. This is when I keep it. But then like some traders are profitable. They are making like small trades, or they are making like big profits. Like when it's big profits, also I tend to send it to the market because I don't want to take big risks. So think about it. If you are a trader and you want to trade, how big is your risk? It's kind of the same thing with the brokers, especially if they are new brokers or brokers who doesn't have much experience. So I don't want to risk paying a client from my own pocket. So I prefer to just like charge him commissions because I do this anyways. But if it's a big client, even if he's losing, I don't want to take the risk for that. This is when they send all the trades to the market.
Okay, so one thing is the profitable traders stay in the A book.
Yes.
Because the broker do not want to pay pocket money for the profits.
Yes.
And at the same time are the big players that open huge positions. They're risk, right? They're risk for the broker. And like if it's a huge player that is still losing everything, I assume the broker will keep it.
Yes. So again, like it will all depend on my risk management as a broker. So of course I hire someone who is very good with risk management who will decide, okay, these trades are losing, but it doesn't make any sense. So this client is not a professional trader. He's just like playing with the market, gambling. So I can keep, because I know like even if he wins at the beginning, he will still lose because he's just gambling. Another way is like I keep monitoring the account, and when I see that it's losing right now, but still like the trades are making sense, so I don't want to take risk, especially with the big players, because when they make profit, they make a lot of profit. So even if they are losing at the beginning, they still like make a lot of profit. So it's all about risk management. Even brokers, they think about their risk management. So I think the traders should think about risk management as well.
And is it usually a huge team to monitor all of that risk for being profitable or not being profitable who goes to a book B book?
So actually, it's a huge team. Sometimes it can be like 30 people. But right now, like most of the brokers, they are using systems for that. So they have systems to check trades, and they have system to check which one is profitable, which one can like have many trades in a specific time or a specific session. They change the take profit or stop loss. And this is when they start like interfering, as in a human will be monitoring this. So that's why many people, when they want to like manipulate with this risk management systems, they just like do something different than what
They
do
just
usually.
adjust the system,
Yeah, they just play with the system. I mean, like if you are checking what I'm doing, as in like lot size, or even if I'm using a grid system and then like I place some different orders, then the system will not detect what I'm doing. So for example, I'm trading USD the whole time, I will just place 1 or 2 trades on gold. So the system will not detect what I'm doing. But this is with the savvy traders.
You say if you are trading, are you actually trading yourself,
Yes.
or are you working only for brokerages?
Yeah, I do trade. I love to trade. I am a trader and I trade different things. I trade manually sometimes. I watch the markets. I watch the stock market. I watch commodities. I love gold. I love to trade in gold. Currencies.
Is that because you're in Dubai and there's a lot of gold around?
No, not only because of that, but I think like it's interesting because like all the governments everywhere in the world, they are buying gold right now.
So they back up the national currencies in gold.
Yeah, and they have the reserve in gold right now. Gold is the safe haven. Whenever there is something
Absolutely.
happening in the whole world.
And at the time of recording this video, the gold is just exploding, reaching new highs every day. And as someone who is working for brokerages and you know everything from the back end and you're trading, what is the alternative? If someone is like sick and tired of Forex brokers and someone is disappointed or always thinks it's a big book and brokers are manipulating prices, what is, according to you, the best alternative? I can guess it's not prop firms because it's another scamming niche, but what is the alternative, or what platforms do you use the most?
So I actually tried the prop firms as well, but they find ways not to pay you. So it's not the best solution.
Yeah.
Some of them work, but you never know. You will be like on a challenge for a few months, but then like they will not pay you. So it's not the best option. But actually there is something like iFunds. You start with a small money and you get a big account where you can trade many things. All you need to worry about is just the drawdown. But if you are trading manually or you are trading with an EA which doesn't have a big drawdown, they have very good trading conditions. So you can just put it and forget it. And they can pay you your profits once you reach like $50 profit. So it's a very good platform.
I actually used iFunds quite a lot in the last few months. I saw a little bit higher spread with them, but I guess this is because they use a liquidity provider on the back end, the Basics broker. And I was also concerned a little bit about not having a solid regulation, but it's a fact that they pay out nearly instantly, right? Which is the most important thing at the end of the day.
So again, even if you are talking about brokers or platforms, if you test them for many months and they are paying you well, and their spread is fine, it's not like so huge or anything. I've seen normal brokers who put like a huge spread, but their spread is average. It's not the best. It's not an account with
I agree
commission.
on that.
But it's still like it's fine. It's not so big. And they, as you said, they pay out. I receive many payouts from them. So once you reach $50, then you can take your profit. And it's a good thing that this is part of your risk management. Whenever you get some profit, you should withdraw your profits. You should enjoy that.
Absolutely. I always say that in my videos as well. Yeah, and I recorded plenty of videos about iFunds, showing it as an alternative of using a Forex broker. But usually the traders are skeptical on the drawdown of 10%? Because let's say you buy a 10K account for $700 and people will say, why don't you trade $700 live account with a huge leverage and it's gonna be the same thing nearly. And I've done a lot of calculations and I still believe iFunds or funded program is a better option because you have more margin. Can you explain how exactly leverage works and margin? Because especially after Bitcoin came on the table, those terms are a little bit mixed, but in traditional Forex trading, how leverage works, what it is, and is it risky actually?
Having a high leverage is really risky. This is one thing. But when we talk about leverage here in Europe, for example, it's 1 to 130. This is what I know very well.
It is, yeah. If you're Segregated, I believe it's 1 to 30 you get for the currency pairs. For the rest, like gold and crypto, it's even less, yeah.
Yeah, so let's talk about currencies only, so it's easier for everyone who's watching. So, for example, if I'm trading with iFunds and I'm getting a leverage which is higher, like 1 to 100, because this is what they have with everyone. So this is a better trading condition because think about like my exposure, like when I place a trade on a $700 live account and when I place the same trade on iFunds accounts, which worth $700, but it's giving me like 10,000 to trade with. The margin is less, so I have like bigger free margin. If my trade goes against me, still I have a very high margin to recover. Like I can close 1 trade, 2 trades, 3 trades with losses and still I have free margin to trade with because the margin that I require is less. And at the same time, I still have like a bigger account to trade on. So it's not the same lot size that I will be using.
What is the margin with simple words?
So the margin is the required amount locked so that I place a trade. So let's say that you want to buy a car, for example, you go to the bank and the bank will lend you some money, but again, they will ask you for a down payment. Right. So it's kind of like the down payment for anything, a car, a house. So this down payment is part of the total that is required from you to buy this amount of EURUSD, for example, euros against the USD.
So if I want to place a trade on euro dollar, is down payment that the money that's actually locked from my account, from my deposit load, yeah?
Yes.
This is the margin, and the leverage is
a loan on that.
Is a loan from the broker. Yes. Combined, so the margin and the leverage is the total amount, we can say.
So let me place it this way. So the leverage is how many multiples you can take as a loan to place any order. So me as a broker, I give you multiples of your money. So let's say that you have a leverage of 1 to 30. I'm giving you 30 times your money to place this trade. Like 1 lot of EURUSD requires normally $110,000 to buy. But if you have a 1 to 100 leverage, it's 100 times less. So it's going to be $110 only.
Right.
So if it's 30 times, you divide this by 30 and so on and so forth. It's the same for any other trade. So if you want to calculate your margin for indices, for example, it's going to be a little bit different because some brokers, they give you 5 times, some they give you 20 times. So you need to check what is the margin requirements for that, especially with your leverage, because as we mentioned, leverage is just a loan on your trade. So this takes us actually to swaps as well.
We didn't talk about swaps,
Yeah.
Let's say how swaps work.
So if I want to explain to you swaps, what are the swaps? It's kind of the interest rate. Mm-hmm. So if I'm giving you a loan on something to trade, of course there will be like interest, right? So when I calculate the swap, so I calculate the instrument, let's say gold, for example, because it's a commodity, right? The US interest rate is 4.5%. So I calculate the value of your trade and I divide this by 360, which is the trading days per year. And this is when I get a sum of money and I add it as swap. This is the international swap. Some brokers, they tend to add to this as well. So if, for example, the interest rate is like 4.5%, they make it like 5% and they take like this difference, or they make it 7% and they take the difference as well.
So as a trader, I usually see the swap as the cost I pay to the broker for keeping the trade overnight, but it comes from there that the broker is actually lending me money.
Yes.
With the leverage.
Yes.
So they calculate it based on the interest rates. And when it's two currency pairs, they look at the interest rates of the two countries. For example, pound dollar, the interest rates in the UK and the US.
Yeah, so whenever we are connecting anything with the US dollars, so it's coming from the US, as in like the interest of the US today. This is where you should calculate the swaps. But if we are talking about crosses, it's a little bit different because you look at both of them. But again, I'm sure like it comes from the exchange. So where is the exchange that I'm trading on? So I can be like trading any currencies, but it's coming on the New York exchange. So I'm using the swap from them because again, I'm taking this money. Me as a broker, I get a loan and I give it to you. So whatever I'm getting charged, I'm charging you. I'm getting it from New York exchange, so I'm charging you the US. I'm taking it from London exchange, so I'm getting the UK interest rate and I'm charging it for you. As a broker, we just like connect you to the market. So wherever it is, we are just like charging you whatever is there. But sometimes with some brokers, they just add a little bit up to it so that they make some profits as well.
Right. That makes sense from a business point of view with the brokers. As a trader who knows things from the back end of the brokers, what would you recommend for the beginners or for the average trader who's listening today? What type of account one should open? Should they look for a few brokers? Perhaps funded accounts with iFunds, as we said, is a great option. Or they should keep only one account to make it simple?
I would say always diversify. Always diversify. Try to have like live accounts with regulated brokers, like as much regulated as possible. At the same time, try to find better conditions. Sometimes the broker will ask you for a bigger funds to give you a better conditions. Like ECN account, it requires like $2,000 or $3,000 as a minimum so that I can give you this account. But if you cannot afford that, still like the STP is not a bad condition or anything because you are getting charged spread, but it's not bad. Like look for better ones, like a better spread than the other broker and so on and so forth. And iFunds is a good platform where you can also have a bigger funds for less money. But again, like you have to manage your risk because you don't have the whole 10,000. You have a drawdown also, which you should keep above that.
So if you have a strategy with low drawdown, iFunds is the good option. And if you have a strategy with high drawdowns, like the Grid-Martingale systems, then the live account is the best option.
Yes. So always diversify. And as you said, like if I have a martingale strategy or a grid strategy, which I know like one day I can have like many trades open and I have like a huge drawdown, I should not risk my iFunds account with that because I know I have like 10% drawdown or something. But it's better if you put that on a live account because it will recover. Like the market tend to go up again.
With a higher leverage.
With a higher leverage, of course.
So you have space for the EA to open more trades, right?
Yes.
Makes sense. So what I'll make sure to remember from today's podcast is diversify with different accounts, different assets as well, because you said you're trading gold, currencies, pretty much indices, whatever.
Try to diversify. Try to find a good strategy for everything because if the market changes every day, right? So like if the market changes with gold and you are not profitable there, you have some profit from the indices can cover up your gold losses or the currencies losses or crypto losses. And if you have like all of them are good, then you are making different profit everywhere. So try to find like a good strategy in different assets because this is the best way to do anything.
Absolutely, this makes a lot of sense. And it's like investing in stocks. People tend to invest in indices more and more, ETFs, because they combine many stocks, and you don't rely on a single company. It's the same thing in trading, isn't it? You want to diversify on different platforms, brokers, funding platforms like iFunds, and you want to diversify at the same time on different asset strategies, EAs, to make sure you don't risk everything.
Yeah, because when you asked me, it's easy, simple to put everything in one account. I don't think this is wise, because imagine if I have like everything in one account and I get like a big loss in this account, so I'm losing most of my money, right? But if you diversify, even if you are making like no profit, or you are having some losses in one of the accounts, but in the other accounts I'm making profit, so still like the total is profitable, or small loss, it's better than.
And if you have everything in one account and it turns out to be a big book account, right?
Yes.
You might also meet the manipulation from the broker, which we discussed. And I have a last question that I really like to ask everybody who is on my podcast. What is your recommendation? And of course, this is not a piece of financial advice for everybody watching or listening. What is the amount of money, let's say in percentage, people should be risking into trading? Because I know you've seen a lot of people losing money from the brokers end. How much people should be putting into trading? Should it be all their savings, a little bit? What percentage? Like where people should feel comfortable?
So again, as I told you, you should be diversifying in everything, not only in the financial market, but even when it comes to your assets. So for example, you should be able to look at your portfolio and you find everything. Try to put like some money in a piece of land, or a house, in a car that it has a value, or watches. There is a lot of investments in different assets all over the globe. It can be like wine right now, fine wine, or art.
Yeah, absolutely.
Yeah.
Yes, it's a huge trend. So trading should be a piece of the whole thing you own. Right?
Yes. And when you think about trading, it's really rewarding, but it's also risky. So you don't want to risk everything there. But it can be, if you manage your risk, I can put everything in trading, but I manage my risk very well, as in I manage every account. I have a specific loss for this account. It can be like 10% or 5%, whatever you are willing to really risk. I have seen many people who are doing this and they are constantly profitable, because the financial market is really rewarding. If you look at it, comparing to any other investment, it's really rewarding, but you have to manage your risk even in this.
And what you say makes a lot of sense, because quite often people ask me, should I be risking $1,000 for this account? It's not actually the deposit you make, but exactly how much you risk out of that account. Because you can deposit $1,000, but if you're risking $100, if your stop loss or account protection is $100, then you're actually risking $100. You're not risking the entire account, right?
Yeah.
Even you put a lot of money into trading, what matters is how much you risk from this money.
Yeah, as I told you, I know clients who put millions of dollars, but it's all about managing your risk. It's all about what you really are willing to make against what you're really willing to risk. So I am willing to make $50, but this is the maximum I can risk to lose also. So it cannot be like, oh, I'm willing to lose $100, but I want to make 100,000. This is not gonna happen.
It's not likely to happen. It's either you're very, very lucky, or you will blow your account. Mark, I thank you very much for flying all the way from Dubai.
Yeah,
join the podcast. It was a pleasure. I'm sure it was very useful to our listeners, and we will be happy to answer any comments down below. And I wish you safe trading, all the best, enjoy Dubai and the life you have in there.
Thank you for having me here.
It was a pleasure speaking to you.
Thanks.
Thank you.